Friday, how did I have the sentiment that price was going to go towards midnight? Because that's exactly what it did. It ended up going towards midnight and even beyond midnight. But what made me feel like price was headed there in the first place? So at that moment, we were in like right around here. Now, you guys always have to keep in mind the price will always go from a premium to a discount in a repeat. It's always going to be a process like that in between each time frame range. In Hello CTL, we're doing a quick recap of the week. But as price goes from premium to discount, you can kind of calibrate when it's overextended to a certain amount, when you can expect it to potentially do a retracement to either a premium or discount depending on where it's delivering. We started off Friday with price wiping out sell side liquidity in the hourly time frame right around 8 a.m. So, why is that significant? Price moves algorithmically, moves with intention. That's the reason why sometimes in certain trades I say that price has unfinished business somewhere and it wants to go there. Similar to this, price had business that it needed to finish here. That's why for me, when I'm holding my trades, my main targets tend to be the hourly liquidities. And that's why I try to trade before 10 a.m. because my focus was to catch the 4-hour expansion to an hourly liquidity. In this instance, the hourly objective, you could say, that was already met. Price had already taken out the hourly sell side, and if we were to look at even smaller time frames, it did so going from the highest point to the lowest. If we measure here to here, a premium into a discount. If we also measure from the high time frame, at that time, that 4-hour price, let's go back to the hourly actually. Price in NQ, we're starting to reach into a discounted area from its big range. So you can see practically that as price reached into this point, it was pretty much what you could consider its lowest point, and it wiped out its hourly liquidity. So with that in mind, where could you expect price to go? Now, if the objective were to continue selling off into sell side liquidity, then what we would need to see would be a retracement into a premium of a range for continuation lower, or clear concise displacement with each PD ray being super respected to give you that indication the price really wants to continue delivering towards the opposite side. Now at this point, timing is also important. Keep in mind, we took this out around 8:50. Price took out an hourly objective before 9:30 open, or pretty much close to 9:30 open. So throughout all of this time, we've been expanding here, yet we haven't done the 9:30 open manipulation to truly send it towards a certain delivery. With that in mind, we can expect that price is going to do something nasty to start the day. Now that could either be, if we are to go lower, a manipulation higher to wipe out people that are already banking in shorts, because you got to keep in mind, price generates liquidity by wiping people out before doing the real moves. So it will be wiping out people that had their stops here, and potentially those over here as well if it really wanted to, if it wanted to continue going lower. Or if it wanted to screw everyone over already, now that everyone that was long, people that had their stops here, 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 and here, now that they all got stopped out, if the true intention is higher, they will start delivering it to the upside. So that was the first hint. We started the day with hourly objective taken and at a discount. As we continued the day, we noticed something peculiar. price made an SMT as well at that very time. As price made that divergence, it led with a, let me see, right here was the SMT with S. It led to the inversion, which after we saw that it made, we ended up participating in this one right here. This is where we started our long. Now, for our objective, we were targeting buy side liquidity and potentially midnight. We can see that it ran through all of it, but it was just so shy from my target, unfortunately, that I wasn't able to secure profit in that moment. Now, yeah, this is where it happened. Was that bad of me? Well, I could have definitely scaled out some, and that way I would have been a lot greener than letting it come all the way back towards me. Now the issue here, this is why 930 is something that you have to take, in my opinion, with a grain of salt and what it can do. As much as you can believe that you can try and call out the manipulation that's going to happen at 930, you're not always going to be right. When we caught the long, it was nicely calculated, but 930 can do all sorts of things. Now we were predicting, right? Since we knew that the draw at that point, after it invalidated all of this, after it made a 5-minute shift, we knew the draw was going to be midnight and buy side liquidity all the way up here. Confidently. But what happened? I anticipated that 930 was going to simply manipulate deep down and then shoot up. That was the assumption. This is why trade management is really important, and accepting affordable risks as well. If you're in a position where you cannot accept a risk where 930 could just simply make you be wrong where it does this, then it's best to always scale out for profit or scale out majority and let your runners do the damage. In this case, if I had scaled out, I would have secured a nice amount and my runners would have been stopped out at break even. But because I thought that I could have immediately calculated the 930 open, how it was going to react, I did misplayed it there. I could have kept my stop at break even, but I also wanted to see if I could average more in, because as I said, I was really confident of the draw. Now at that point, we got stopped out straight up. Price took out our lows, we were out, and then price immediately started to delivering right back up to the intended draw. Now the best way to avoid scenarios like this, like I said, is greed is good, but definitely you want to be able to let your runners do more damage, especially if you are not able to afford that risk. I was able to afford the risk, so I didn't mind it too much as it had me salty. But if you guys are trading your funded accounts and you're in drawdown or you're really close to a payout, it's better to play it more safe than play it risky. It's always better to play things passively and also compound those gains rather than throwing them all away or putting yourself at risk of losing it. Because the idea is that we're in this game for the long term, right? We're not in here to have 4, 5 winning days, maybe 10 winning days in a row, and then losing it all in one day. Or sabotaging ourselves where we cripple ourselves. We're in a lot of drawdown and we have to grind our way up. If I had just secured profit here, allowed myself to get stopped out on my runners, I would have been able to, oh, okay, it's doing exactly what I wanted. I can get back in for the longs and see price run all the way back to our objective, which eventually it did hit. So we had the right draw, the right bias, but the mismanagement of the trade in itself. And of course, there was the fact that I didn't have enough time to truly enter again after that. So that would be the recap of that trade and what my suggestions would be for when it comes to managing things better. Greed is good, but not too much greed. And always securing runners while keeping in mind that 930 is a wild card. You can never truly expect the amount of manipulation it can do, and it's always best to, if you're in the trade, just have the runners in game, but if you're not in the trade, then just wait for the 930 to be done, because you'll still see a clearer message right after. If you had avoided all of this mess that 930 delivered, right here, this would have been another good setup. This one right here, because this started to lead into 953, where we inverse the SIBI, which meant that price had unfinished business and it definitely wanted to come for that buy side right there. This could have been an alternative to take after waiting this off, and this would have been with little to no drawdown completely. Now let's do an outlook for this week. What could we expect this week to do? Ideally, when we are measuring the outlook for a week, we could want to start from the higher time frames. Our objective is to identify what the next weekly candle may want to do. What does it want to expand to? What is the draw of the weekly? Is it up or higher? We use that by using the daily time frame and the 4-hour time frame as well. In this case, we can see that the daily time frame is in a little is a kind of accumulating here. It's accumulating all of this liquidity. It hasn't expanded lower, but is neither really truly expanding higher just yet. Now we did have this moment where price was respecting a daily BPR to push lower, but then the very next candle opened pushing higher, which is showing that as much as it respected the daily BPR, there's something it's wanting higher. And at the very same time, ES made an SMT. ES, well, it looks like it made all-time highs again. Made all-time highs. So what could this potentially mean? It could mean that this is simply a manipulation and this was a reaction because ES made all-time highs again, and that we can potentially start looking for even greater move down. I would like to see a greater move down. Yes, this is recorded. We have red folder news every day this week. Let's see. PMI, JOLT, PMI again. Powell. This is a heavy week. Okay, Thursday's kind of chill, but and NFP on Friday. This is definitely a heavy week, so actually we can expect a lot of manipulation to happen, but a bigger delivery to happen as well. My assumption from this and the divergence of how ES made all-time highs is that we're probably going to I'd like to believe we could make a leg down, or that we're going to start pursuing all of this trendline liquidity that we left right here. All of this liquidity. But to get that confirmation, we need to see how price reacts to this area. Right now we have a bullish hourly model that can certainly say that we may push up higher for Monday. So my anticipation would be that price is going to probably retrace into a discounted area and then look for continuation higher, possibly taking out the buy side liquidity once more, and then selling off. An alternative could be that price just gaps up and then starts selling off, or the price breaks this and starts to pursue downside. I would definitely prefer if it were to pursue downside more, since we are at a premium, since we made all-time highs and a divergence at the upside. This would be a lot more promising to take out all of these lows, and this could actually be a good swing as well. The thing is, since we have NFP, it does make it a lot harder to determine. I think last NFP was very disappointing though. Last NFP didn't really do much, so we have to see if this NFP will do anything at all. And it's also customary that we have December being a bullish month, so either if price does not fail to make that If price fails to make this bullish model, we can definitely go lower, but if it succeeds, then we can also potentially see all-time highs here. So it's not very set in stone or high probability the plan that I have in mind. It really depends on what we do on Monday for the outlook, since we have so many news going on. But that's okay. So ideally we make our plan starting from the daily and move into the hourlies. The hour pretty much just set in stone what my bias and analysis is going to be. I'm going to be approaching Monday with a bullish outlook for a price to just retrace and then continue going higher for buy side. However, if Monday were to break through this, I'd start looking for sells. Structure wise, at least, depending on the manipulation we do during the news, we can have any sort of bunker stuff. And if we gap up, then I'm definitely going to look for shorts, because I think that if we manipulate even higher, right around here, then price is going to come back down to deliver all of this. I don't think we're going to end the month bearish at all. I'm pretty sure it would be to just wipe out some lows and then come right back up. We also have this weekly fair value gap right here. Hasn't been tested in a while. And that would be the thesis for that day. Let's see. Let's go to the 27th and do a recap of the 27th. Since that was also our red day. Why were we down this day? I remember now. We tried taking 2 longs, which ended up failing. Okay. So this was one of those scenarios. How can we avoid what happened here? I remember. It's right around this area. Right here. So, like I always mentioned, the tool of premium to discount is really one of the best when it comes to identifying when price is too high up or too low. In this scenario right here, from the expansion that we had here to here, price was already at a premium level at this point. So anything above equilibrium is premium. Anything up here is buying with the probability that price does not continue going higher. And also, if you measure the complete opposite from the delivery lower, you can tell that we are at a premium if price were to be bearish to continue going lower. We're no longer at a discounted level. So, from the get-go, I was assuming that price was going to pursue buy-side liquidity because of the structure that we were making, but what I could have done to be a lot more patient and wait for things more was simply wait for price to come at a discount first to identify what it really wanted to do, its true intentions. I thought, since we were in a Q3, I believe, that price was going to start delivering from here to the complete upside. Now, we did have a positive reaction when price did this, it reversed, it pushed higher, for sure. But after it failed to break through this BPR, I should have been a lot more careful. Price came right back down, did the move higher again, and failed to deliver any higher than this. At that point, like I always say, where is the unfinished business that it might want to have? We have all of this trendline liquidity right here. This is good enough liquidity that if price really wanted to wipe it out, it could start delivering towards this before going higher. What other confluence do I have to support my decision? Well, let's see. When I went long right here, do we have any 5-minute structure supporting the long? No. We have an order block, but that's not really like a fair value gap or a model in itself. So not really. 15-minute. Do we have anything here? Nope. No fair value gaps, nothing. What we did have was the rejection even of this 15-minute CB right here. So not only were we at a premium, we were having no sort of setups in the mid time frames. All we had to rely on was this 1-minute model that also happened to be with Q3, but it was a 1-minute model regardless at a premium. So already this was not an A tier setup. This you could consider it a B tier setup. Or, in fact, let me see if there's any hourly confluences. Nope, we were rejecting. Okay, yeah, there was hourly confluences. We had this little busy right here that we were using as support as we were challenging the hourly CB. So for sure, it was a B tier setup. Now, knowing that, of course, you accept the risk depending on what you're comfortable with. I was comfortable taking this trade, which is why I took it. But there was more room for more confluences that I could have had to be really confident for this setup. So I did take this loss after we ended up getting stopped out when price ran through here. Okay, happens. Now at that point, price did wipe out some trend line liquidity. It didn't wipe out all of it, but it did wipe out some of it. My assumption still was that price was bullish, especially after inversing this, which it had to respect for continuation lower, and I gave this another shot right here for the expansion higher. At this point, price was taking too long to expand, and we were reaching again 930. Now I didn't wait for 930, but we were getting really close there, and same kind of thesis. We're at a premium, there's no mid-time frame structure, it's still a B tier setup. Despite that, it looks like it could potentially rally even higher. It's not the greatest confluence for that delivery. We took it, and I got stopped out the moment price shot down and broke through the structure that I was looking for, which was right around here. I got stopped out right around there. Alright, 2 strikes. This is another thing as well. Ideally, when you're playing the right draw of liquidity, unless the price action is just abysmal. If the price action is just terrible, then it's understandable. But if the price action isn't necessarily the worst, and you're just wrong twice with the right draw idea, it can be a sign that you might just be reading price wrong, that you might not be having the clarity that you need to be able to tell where price is going. And that's why usually for me, it's 3 strikes and I'm out. Because with my experience, if price is really easy to read, then everything's going to be really smooth. But if you open the charts and you have no idea what's going on and you can't get a good read, you're gonna have a hard time. Your accounts are gonna have a hard time, and you're probably gonna be chopping around your drawdown, going up, down, with a win and a loss and a win and a loss, until you either break your rules or you have a good trade and then you're done. So ideally, that's why I have my 3-strike rule to try and limit myself to that overexposure, especially when I'm wrong. At this point, I knew that longs were not the move because I was simply wrong. Price did not want to continue going higher, and then 930 just pretty much confirmed that for me. 930 showed me that, yeah, price just wanted to run over this trend in liquidity and then reached all the way down here. Now at this point, okay, I thought we were bearish. We were going to continue going lower because that's the only intention that it may have after doing all of that. Now, what was our 3rd strike? I remember it was not a long. We went short. Okay, I think I was running out of time too. I remember we tried. Yeah, I believe it was around here. Yeah, it was this one. So it's good to look at these days and see how easily you could avoid mistakes. I'm looking at this one and I can just tell immediately what I could have done differently. At this point, yes, price was trending lower. Price was delivering towards its hourly objective. What was its hourly objective? It was this south side right here. Then we wiped out the south side right here. So this is just a common sense question at this point. right? If price has delivered through hourly liquidity, what are the odds that it's going to continue going even lower the more hourly liquidity it takes out? It decreases each time. Every time it just, the probability just gets less and less and less, and the risk just increases more and more. At this point, since we took out 2 hourly liquidities and reached the very kind of bottom right here, you can anticipate that price is going to try and retrace either deeply or shallowly. It's completely based on your risk tolerance. I did believe that price was going to retrace here and just continue going lower, that I was willing to risk it. I think we shorted around here, and then price blew through our SIBI and closed firmly above, and that was enough to make me feel like it wasn't going to continue going lower and that I was going to try going into a premium, because remember that that's very important. And from here to here, yep, I remember we were targeting premium. The idea behind this was that price was going to come here and then sell off. So to avoid things like this, it's always best to be patient. If you miss the move, let it go. And always keep in mind, especially doing when after high time frame liquidity has been ran through, to wait off the kind of fake moves that happen. So for example, this was a manipulation up. I could have gotten back in after right here, because this would have been the confirmation that, oh, okay, it definitely wants to continue going lower. This was simply manipulation. So my suggestion would be, if it makes a pop in a trend down like this, or in a trend up actually, after it delivers and wipes out hourly liquidity, high time frame liquidity, if it makes a pop, or yeah, let's say in the scenario that we're going is down, if it makes a pop towards the upside, it still does not take out any liquidity but invalidates some PD raise. If right after that it gets ran through, then you look for the entry. That would be what I'm kind of learning from this one. Or if it makes this is also why you can't really trust the 1 minute one. If you see price do a 5-minute shift, that's why that's important for telling when the trend is about to end or when structure may change. There's nothing here in the 5-minute indicating that's going to go higher yet, or the trend is going to change or anything like that. Nothing. That is why this 1 minute one failed so easily to continue going higher, even though premium was all the way up here. It failed so easily because it's just a 1 minute time frame one. There's nothing in the 5-minute. So that is what you can do to navigate things like this, and I think that's what I'll be doing heading forward as well. Waiting for extra confirmations before attempting certain moves, especially when price runs through hourly liquidity. That's how I could have avoided these 3 losses, honestly, and also the loss of Friday. Well, it was more of a management, but this was clearly because I was too angsty to get a trade with the time that I had, and I could have waited for extra conferences to make it an A-tier setup rather than trusting B-tier setups. But yeah, that would be my recap for this week and also what I think next week may do. Do you guys have any questions or something you'd like to ask? I see cryptic. Yeah, the Friday trade was good. It was just, at least for me, it was a matter of management right after. I could have just simply scaled up majority and gone stop down my runners. But I really wanted that. It's so nasty when it does that 2 tick thing or that 1 tick move. It's just so close. But It's okay. I know what to do next time. I accepted what happened. We move on from it. So the models that I have the best win rate with are tend to be the ones that involve a lot premium and discount, and the 2022 model as well, and also the, I don't really know what to call it, but it's when it's specifically I took the trade. I'd send a picture even actually. Let me see if I can find it real quick. Let me try to remember what day it was. I always have a good time taking this sort of trade. This was on Thursday as well. Alright, let's go to Thursday real quick. It was this one right here. Okay, I think. No, it was not that one. But no, that's the PM session. But that one looked like it. No, it's Wednesday. My bad. Here it is. Okay. So it doesn't really have a name. It's just sort of when price does certain movements. Now, in this instance, this actually goes to what I was saying really when it comes to trends from before. So price ran all the way up here. We're clearly at a premium, right? Price took out hourly liquidity, right? Took out this high time from liquidity and everything. So, how do I know that price is really going to continue delivering upside to take out even more buy side liquidity? What is the indication that's going to do that and not just simply reverse? Or if I enter the first retracement, just break right through it? There's no guarantee per se, especially at such a high premium, and that's why the losses that we had that one day on Thursday could have been avoided if I waited for something like this, which is exactly what I said. Price here retraced into this fair value gap, sure, respected it. Came right up and then ended up breaking through it and making a bearish model. At that point, you could assume that, okay, price is probably going to either sell off to a discount or that it's going to maybe inverse this to continue going higher. Now, which has the higher probability depends on different things. What is in the mid time frame structure? What is in the hourly? Let's see the mid time frame structure. So, if we compare this, where is it? It was right here. So the mid-time frame structure in this moment, what's the difference of the last one? The last one had no mid-time frame structure. This one had a fair value gap. So we have a confluence here. If this 5-minute fair value gap holds, there's a nice possibility that price is going to deliver going higher. Okay, cool. So all I need to see really is this 5-minute fair value gap hold to get my confirmation the price does in fact want to go higher. But what is there that could say no to that? The fact that we failed this inversion right here, the fact that we made a civvy, and the fact that this is a 1-minute 2022 model for downside. Now, I could short here, or I could go long based on the 5-minute fair value gap, but doing either action is playing against a certain thing. If I go short, I'm playing against a 5-minute PDRA. If I go long, I'm playing against the 1-minute model and the fact that we're at a premium. You can see that there's two clashing ideas which both have decent probability to work out, but what would have more probability is to wait to see which one gets invalidated. By the invalidation of a setup, you can get that extra sign that price has unfinished business or wants to deliver to a certain objective first before continuing what you want. And this is how I could have avoided the losses of Thursday by recreating or waiting for this to give me the confirmations that I wanted. So if you wanted to really go short, you need to wait for that 5-minute fair value gap to be invalidated. But if you want to go long, you need to wait for this 1 minute model to become invalidated. And I waited at this point for this SIBI to become invalidated, because if this became invalidated, that would mean the price was going to run up for these highs. The moment the price closed above like this, I entered a long right here, and I held this for the upside move right there. And I used the invalidation of a setup as my confirmation to play the opposite direction for the unfinished business. This would be one of my good win rate model setups, especially when everything's in confluence. And this is actually what I was trying to suggest earlier when I was talking about the losses that we took on Thursday. This is what I should have waited for, the invalidation of a setup as my confirmation for a new one. And if we go to it, let's see how that would have played out if we had kept that in mind on Thursday. I keep confusing the days. It was not Thursday, it was Wednesday. Yeah, right here. So, this was our last busy. This is what price needed to hold. That failed. That means that the bullish setup that was forming here to push price into a premium has completely failed. What could be the intention here? To potentially deliver continuously lower. So, with the invalidation of that and the confirmation that this was respected, although this would have been kind of hard to catch, it didn't really retrace deep into the SIBI, you could have still snapped it here and would have been able to catch this nice leg down. That way you could have avoided the loss of shorting here, and you would have been able to secure the next liquidity that was taken. Any other questions? Alright, well, if there's no other questions, this is recorded. You guys will be able to rewatch it. Essentially, what we did in a nutshell was recap the trades that we took, the ones that we failed at, and what we could have done differently to avoid that, and to keep in mind for the future. And also a little bit of an insight of what we might do for the rest of the week, or the upcoming week. I will see you guys tomorrow morning, and let's try and do the best we can for this week. End it green. See you guys.